very good evening to you. Good morning from me, Lincoln. If I can ask you, first of all, just the reaction to the retail sales. Clearly, the market's strong rally from the S&P and the Dow and the Nasdaq.
Well, I mean, look, we've been oversold for quite some time. In fact, a very rare occurrence, not since 2002, we've been down 7 weeks in a row, this being the 7th. So we were looking for an excuse to rally, and certainly the retail sales on the month-over-month number gave us a little bit of cause to do that. The auto number is actually up 0.3, and we were expecting a down 5. Indeed, the PPI numbers came in a little bit less hot than expected, and of course, news out of your neighborhood in our overnight session certainly got us off to a very good start. So a bit of a relief rally, both in terms of the near-term oversold conditions of markets, but also just a bounce on finally the first piece of nice macro news that we've seen in probably over 4 weeks.
And Lincoln, I mean, you mentioned our area here, China's, of course, inflation figures, industrial production, etc., retail sales. I mean, does the US really take note strongly of that? Does it really push the markets higher?
It certainly does affect the futures markets, but I do think that the larger set of issues here has to do with whether or not the emerging markets continue their role as the leader in terms of pulling the global economy out of the depths of that Great Recession. Our thinking has been that, in fact, the emerging economies, China and the other parts of Asia, are in fact now reaching their cyclical tops, and to see a little bit of a nudge to the upside in terms of industrial production is helpful in countering some fears that not only do we know that we're going to deal with the slowdown in terms of consumption and pricing power in the developed economies, but you were concerned that you would also see that leak into the emerging economies. If, in fact, it doesn't, there is a little bit of a ray of hope in terms of markets not totally falling apart here.
Back to the US, if I can. Tim Geithner was first saying you must raise the debt ceiling limit, otherwise we're going to default in the US come August 2nd. Ben Bernanke was last night saying we face a crisis if it's not raised. I mean, on the street, you're at the coalface there. Is it a big talking point? Is it a big concern? Or will they actually reach agreement, do you think, in Congress?
Look, on the floor here, it's become a bit of a talking point that the Federal Reserve Chairman seems to sort of be missing the mark in terms of what his mandate is here. His mandate is for full employment and to monitor the inflation situation, and this marks the second time that he's sort of poked his nose into areas that he should otherwise be leaving alone. First, in terms of patting himself on the back for inflating paper assets, which the Federal Reserve has a very good track record of doing. It also has a very good track record of exploding into bubble popping territory. And then on the second front, really sticking his nose into the debt ceiling, which is a congressional issue. And obviously there are financial market ramifications, but his nudging sides to come together is inconsequential at this stage, and in fact unhelpful given the tone and tenor in Congress towards the Federal Reserve and its fiscal and monetary policy over the last 12 months. Probably not a good place for Tim or Ben to be playing at the moment.
One final question, if I can, Lincoln. You called it one weird story about Portugal, that someone actually predicted a panic, predicting a defaulted Portugal. It was actually wrong about that. What was the floor reaction to all this?
Yeah, there was a late session analyst coming out trying to make a point about the debt loads in terms of the Portuguese situation. It quickly reversed. It did cause a pop in the 10-year Bund future here in North America at the end of the trading session, but nothing more than that. It just goes to show you, I do think, however, in the fixed income space, particularly in the sovereign space, how twitchy these markets can be and how very much on edge they continue to be, regardless of what kind of settlement we find in the Greek situation.
Uncertainty is never good. Thank you much for joining us. Lincoln Ellis, the MD of Linn Group, joining us with his insights again on all Ben Bernanke, China, and even Europe.